Wake up, America. Your money is in danger. We're facing a silent crisis that could wipe out your savings and everything you've worked so hard for. The U.S. money supply has exploded, hitting a mind-boggling record of $22 trillion. This isn't just about big numbers. It's about the very real risk that every dollar you hold, every dollar you've saved, could rapidly lose its value. But the real danger isn't just how much money is out there. It's about how quickly it moves. And right now, that's about to change in a big, bad way. Simply put, the money supply is just all the money floating around in our economy. Think of it like all the cash, all your savings accounts, and even those near-cash investments you have. We call this M2, which is just a particular way we measure the money that's out there. Now, if you look back, for decades and decades, the amount of money in our system was pretty stable. We saw gradual increases, sure, after big events like the dot-com bust or the 2008 financial crisis. But what's happening now? It is absolutely not normal. I mean, we are witnessing an explosion that dwarfs anything in recent history. This is a system that feels like it's being artificially propped up with band-aids and glue, but eventually, it's going to come apart. When the money supply goes higher, it's like adding more fuel to a fire. It naturally creates pressure for inflation, meaning your money buys less and less over time. But here's the kicker. The sheer amount of money isn't the only factor. There's another often overlooked piece of the puzzle called the velocity of money. This is just how quickly money changes hands in our economy. High velocity means people are spending, businesses are investing, and money is circulating fast, a sign of optimism. Low velocity means people are saving, worried, and money isn't moving much at all. Think of it like this. A growing money supply with slow velocity is like pouring water onto a sponge. The sponge absorbs it, and the water doesn't really go anywhere quickly. But if money has high velocity, it's like water rushing through a pipe, flowing fast through the system. From about 2010 to 2020, even though the money supply was climbing significantly, inflation stayed relatively stable. Why? Because the velocity of money was actually slowing down. It was absorbing that increased supply. Then came the 2020 shutdowns. The money supply spiked dramatically. But did inflation hit immediately? No, there was a lag. Why? Because people weren't spending. They were saving. Money velocity completely dropped off. It took a minute before that saving kind of took off for money to start moving again. And then, boom, that's when inflation really slammed us. Here's a startling fact that you won't hear on the news. There used to be an even broader measurement of the money supply called M3. This didn't just include cash and savings, but also other financial instruments and institutional funds. And what was happening? M3 was completely outpacing the public M2 measure. It meant way more money was being created and in circulation than they wanted anyone to know about. It was raising huge red flags showing institutional funds were being created at a much quicker rate. So what did they do? They simply discontinued it in 2006. Funny timing, right? Just 2 years before the massive financial crisis of 2008. The public numbers showed about $6.5 trillion in 2006, but M3 was already at roughly $10 trillion by 2008. They just made it disappear. Why? Because they didn't want people asking questions about all that hidden money. This reminds me of the quote, "Those who control the present control the past. Those who control the past control the future." For the last year and a half, money velocity has remained pretty steady. This has given us the illusion that everything is fine, that inflation is under control, but it's not gone away. It's still chipping away at your wealth, just at a slightly slower pace. This stability is because of things like tighter lending, higher interest rates, and people saving more. There are also things like tariff fears at play, all contributing to why velocity isn't moving as fast. But this calm won't last forever. This is a ticking bomb just waiting for the fuse to be lit. What could ignite it? Two major things: interest rate cuts or accelerating de-dollarization moves. If interest rates get cut, borrowing becomes cheaper and people are encouraged to spend. That immediately sends money velocity shooting up. But the biggest thing people are missing, the true trigger, is that the world is walking away from the US dollar. In the past, other countries couldn't. There wasn't a real alternative. But that has changed. This isn't some hypothetical idea, it's a stark reality unfolding before our eyes. Just look at the news. Major global powers are openly forming new alliances, pushing for a new world order that isn't reliant on the US and its dollar. They are showing strength and unity against US dominance, and why wouldn't they? If your country's reserves can be frozen or seized, why would you ever hold dollars moving forward if you didn't have to? It would not be my preferred foreign reserve asset. If other countries stop relying on the dollar, it means less interest in our debt, fewer buyers for our massive national debt. And if there are no buyers for our debt, we'll have a serious problem paying off our bills. The only way to find buyers would be to cut interest rates even more significantly. And we just talked about what cut rates do. They skyrocket money velocity. So picture this. A record $22 trillion money supply combined with money suddenly moving incredibly fast. What happens? Your purchasing power goes down, down, down. Your dollar will be weaker than ever before. How much more of your hard-earned savings are you willing to lose? Inflation, my friends, is not a bug in the system. It's a feature. It's the plan. It's designed to constantly chip away at your wealth. Look at the lines showing our purchasing power going all the way back to over a century ago. It's been eroding, but the last 5 years are absolutely brutal. Over a quarter of your purchasing power has been taken from you in just 5 years. It's legalized theft right before our eyes. We're living through something truly unprecedented, and it feels like a ticking bomb. But here's the crucial part. You still have a unique opportunity to protect yourself before it's all taken away. We're in a reset that is accelerating, and we can all feel it in our wallets, in our savings. Those on fixed incomes, those who are already retired, they feel it most acutely. They want to leave behind a legacy for their children and grandchildren, but it's becoming harder than they ever imagined. History is clear. We study currency resets, and the patterns are undeniable. Every single paper currency throughout history has ended the same way, its value returning to nothing. But there's always been one constant, one asset that has protected wealth through every single one of these collapses: physical gold and silver. These are real, tangible assets, not just paper promises. We are facing a future where inflation could easily turn into hyperinflation, where prices could literally double overnight. This is not a drill. This is not a situation I want anyone I care about to be in. So if you don't already have a plan, a strategy with physical precious metals at the center of it, now is the time to get one in place. Make sure you're protected. Your financial future depends on it. Thank you so much for joining me today. I truly appreciate you being here. If you found this helpful, please give this video a big thumbs up, subscribe to the channel for more crucial insights, and hit that notification bell so you don't miss our next update. We are stronger when we are informed and prepared together.